it. Thank you very much for that, Upasna. So lots of buzz around defense stocks. So let's start with this, with Deepak Shenoy, who's joining us on the show this afternoon. Deepak, great to have you on. So it's getting interesting now, right? If I had asked you the same question, say 4 weeks back, perhaps it would have had a very straightforward answer because the stocks were just going up and up. But now you're getting them at least 20 to 25% off the peak. And you've heard the news flow, the order wins are still coming through. So what now? Does defense still make the cut?
No, I think, Surabhi, there's a long way ahead. We've invested in a bunch of these stocks, so very biased. But typically, the phase one of, if you may, the defense change has been that the change of policy to acquire from domestic manufacturers, both public and private. I think that phase has started, and so orders are starting to flow through. But defense is the largest expense after interest payment. So there is a fairly large amount of orders that will go in just for a number of things, whether it's capex or whether it is just operational as well. There will be a large amount of orders that will come in from two sources. One is new orders. One is also changing the the regular orders which would have gone abroad to move them to domestic manufacturers. Now we are seeing that in ships, we're seeing that in aircraft, but we'll see that in a lot of other places as well. Now we're talking combat vehicles also. 50,000 was a very large number, but even for a large corporate, even like say Bharat Forge or L&T, which might be bidding for parts of those contracts or parts of the other areas here, you might end up with a fairly large jump in revenues over the course of the next few years. Simply because of this. I think the story is good. Stocks may have run up a little bit, but the landscape is like 5x or 10x what it used to be 2 years ago. It will probably grow even more as phase two comes along, where in order to manufacture all of these things, there will be the ancillary equipment, which is currently also some of it is being imported. That will also start to get manufactured in India, because eventually India will want the entire supply chain in India itself. So I think this phase will continue for the next decade. And in general, if you see defense spending in any other country, it tends to propel a lot in the economy as well, in research as well, and in manufacturing in general, whether it's Israel or the US. You see a lot of ancillary benefits down the line. So I expect this to be a longer run theme.
All right. Hi, Deepak. Good afternoon. Good to see you. And Deepak, I wanted to ask you about Vedanta. It seems the promoter finally is making the right moves, but the market is not supporting the Chinese market. Everyone's waiting for him to make that one mistake, which he normally does, Mr. Agarwal. But at least off late, he's been in top form. What's your view at around 466? Valuation-wise, it has support. The promoter is in far better shape, which you like it. And he's going to be segregating the business, so it has enough tailwinds. Your view?
So we haven't bought the Vedanta. In fact, most in the commodity metal space is not been of our interest recently. So I don't know, in fact, what has happened in China. So I'm sorry, I'm going to have to, I don't have an opinion on that because I don't know what it is. But I think in general, this is a commodity play. So you're buying it closer to the top of the. I think it's not valued. You should buy these stocks very cheap, relatively, but it's not that right now. And it's probably not the best time to buy it in the cycle. Of course, the promoter concerns, like you said, have come down a little bit. And there are other things that they're talking about with their other companies as well, which I think will strengthen the parent. But because it's a commodity, I don't really feel very comfortable playing it meaningfully when you have so many long-term, secular growth stories or strategic growth stories that are available.
Got that. Deepak, just coming back to you, good afternoon. I just want to have these names and we can talk more, but I just wanted your thoughts on sort of what we discussed the last time you were on, which is SMEs, right? And I think some more water has flowed under the bridge since then. We were talking about the Yamaha showroom and the oversubscription, and you made pretty emphatic points there, and a lot of debate and sort of fire and fury around this. Yesterday we've heard from Sebi themselves You must have heard, right? Mr. Ashwini Bhatia, whole-time member, talking about it. Then later he said that there is a consultation paper they're going to come out with on the IPO approval process to maybe make it more stringent. But that is in the works as well. Just wanted your thoughts, Deepak.
Yes, I think, Prashant, we have to have regulation that supports more disclosures and more information being given over to shareholders and potential investors, right? So you want that anyways. Currently, the SME market reveals their balance sheets only once in 6 months, or their profit and loss statement only once in 6 months. They should also be doing it quarterly. Absolutely fair to ask that. There should be more information, as much information as required in the IPO document as well. But I think the calls for this to be either banned, or, SEBI is not saying that. SEBI is saying, no, we're not going to tell people not to have an SME exchange at all, or not to raise money. But the craziness really occurs from the whole system that says your money doesn't leave your bank account, you can bid for anything. Then you will bid for whatever it is. And if something's overbid at 2x, you might as well bid some money so that even if you get a small allocation. The last IPO we talked about was a 12 crore IPO, 19 crore pre-money, 12 crores of new investments, and people have bid 4,500 crores for it. But this is not really bids. This is not money that you're actually paying. It's just blocked in your bank account. You're dead sure you're probably not going to get any allocation. If you get something, it's almost lucky. So almost everybody's throwing their hat into the ring. It's a procedural problem rather than a company problem. The company could have been anything. It could have been the best company in the world. But if it was raising only 12 crores, you would easily see a 4,000 crore, 5,000 crore subscription for it. And because it is a company with a two showrooms, I think people are kind of making fun of it and all that. But this is in fact what the SME system is designed for. I think the froth, if you may, is in people's expectations that if something goes wrong, if I start losing money, the government will come and protect me, or SEBI will come and protect me. No. I think we should be very clear. This is your profit and therefore your loss. So you're going to go crazy in this market means you'll make some money perhaps, but you will also lose a lot of money at other times. And you shouldn't go running around to the government saying, oh, support us, don't allow SMEs to list and all that. I think that is the difference in opinion that is happening. And I think even SEBI is saying, listen, we'll help make the market more secure in terms of disclosures. But you have to read those disclosures. If you're going to bet on some gray market premium, then what can even SEBI do? It's really a point where if there is a market, people will bet, people will go overboard, both on one side and the other side. Tomorrow there'll be SME companies.
That is markets for you, right? Deepak, but my point was, what should be done? Because they will do something, right? Because there is all kinds of things that companies should be free cash flow positive. There was something you must have read. You want to do something which doesn't throttle the space as well.
Yes.
Because it's emerged as such a fantastic source of funding, and there will always be sort of bad apples. But you don't want to throttle it too much either, right? So, I mean, have you thought about that? What can be done? Could the approval process, since that is what they're saying they'll come up with a consultation paper for, would that be made a bit more? I mean, would exchanges do it now? Should SEBI do it? I mean, just your thoughts.
Yeah, so I think the exchanges doing it is still a good idea. I mean, it's relatively, exchanges are good regulators in general. They can be fortifying this process a little more. I don't agree with this free cash flow statement, because a lot of companies in general don't generate free cash flow at this tiny size. They're growing. They need to reinvest their capital back into growth. So if you're in that, you're not going to get free cash flow. You may get cash flow, but you won't get free cash flow. You're going to have to reinvest substantially in capex and substantially in other parts of the ecosystem. So I don't agree with an accounting definition, because A, people will game it, and B, I don't think it's right for an SME market to demand that. Secondly, I don't think we have, I think the guardrails here should be about investors understanding the company before. So maybe some more information that can be disclosed, but also that you should perhaps even stretch IPO timelines in these cases, or increase lot sizes on the IPO itself to be, say, 5 lakhs or 10 lakhs. But I would say that would, these are only temporary fixes, because people will, if they found 1 lakh, which is what it is currently, they'll easily find a 5 lakh and 10 lakh, and still the oversubscription numbers will be high. The point over here is to enforce bad disclosures, wrong disclosures, go after promoters, and fine them for all the things if they have revealed something wrong. I don't think we've seen a lot of instances of that. We know SME companies where a director has sent an email saying, sorry, I'm 24 years old, I'm the only person here, everybody else has vanished. And no real action has actually happened against that company or those promoters. I don't know, if this was about 3 years or 4 years back. But I think that enforcement should be the defining criteria for banning bad behavior, rather than trying to say that, you should be free cash flow positive. So I don't know what will come out, but let's see. The consultation paper will obviously be well thought of, so we'll have to give the comments based on that.
Absolutely, Deepak. I take your point, because there are two different, problems at play, if that's what you want to call them. One is the FOMO in the market, that you want to try all things exotic, you want to, a shortcut to riches, and then you want to bid up a company which has maybe, 12 crores of profit, and you want to give it, subscriptions worth 4,000. And that's on the trader investors. And, they have to, as you said, the profit is theirs and so is the loss. But the other part is the important bit, what you're referring to now, that if there are, characters and candidates which are now trying to game the system, and if there's an element of market abuse in the making, then one would really hope and expect that the regulators step in, because Sebi has sort of done a very light touch approach to SME so far. And given the interest and the amounts at play, perhaps the time has come to look at it a little more holistically. By the way, I want to remind our viewers as well, so since we're talking FOMO of IPOs, whether it's SME or main board, tomorrow on Let's Talk Money, we take the conversation forward actually with Deepak Shenoy and also some representatives from HDFC Securities. Is the pre-IPO market or the unlisted share market, is that really a guaranteed road to riches? Have you asked the right questions that you need to ask before you start dabbling in unlisted equities? Well, we put that question to Deepak and Pranab Punyal on Let's Talk Money. The show will air at 4:30 tomorrow. You can, of course, send in your questions. So feel free to reach out to me or to Deepak on social media, and we will take all of your questions on. So Deepak, having said that, very quickly, let's wrap it up with a main board issue, and one which is having the highest pedigree. So I'm veering to the other side now, and I'm talking about Bajaj Housing. Our colleague Abhishek was telling us how, they're asking for top dollar valuation, perhaps for good reason. Your thoughts now that the pricing is out?
Yeah, I think valuations Bajaj is, the name Bajaj itself is like 8 times minimum kind of thing, price to book, that too, not price to the earnings. But you typically, you have a lacuna in the space, right? HDFC is gone. So the biggest NBFC now will kind of be Bajaj by itself. And it has the ability to go after a few things that banks can't. So, for instance, you can't lend against land if you're on a bank, right? So you get Bajaj gets to kind of go and occupy that space if it really wants to. There are certain limits that are applicable to banks, but not to NBFCs, and Bajaj can go down that route. They have been traditionally quite decent in terms of their book, and you can see from their bond prices that people value their book in terms of saying that they are not going to be careless in terms of the lending process. So that way, I think good stock, good pedigree. I would say valuations are nowadays you can't talk about valuations because it's not very fashionable to say something is overvalued, or rather, it is fashionable to say everything is overvalued. But to that extent, I think the companies are just taking advantage of the fact that the market is giving less importance to valuation than they are to something that's a growing business. I think Bajaj Finance will grow, the housing part will grow as well. And they're listing almost compulsorily, right, because of the RBI NBFC rules. This may change the upstream valuations of Bajaj Finserv and Bajaj Finance. But I would say standalone, it's still a good stock to play with. The problem will come if there are interest rate cuts, and therefore at some point NIM compression within the space that Bajaj Housing operates in.
Okay, well, let's see how this plays out. Deepak, good to have you on. Thank you very much for joining in, and see you tomorrow on that important conversation on unlisted shares as well. Appreciate you making the time. Well, with that, thank you.
you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.